Welcome, friends! Today we're taking a fascinating journey through currency and money evolution. We'll explore how the US dollar became the world's most dominant currency, the role of the gold standard, and how cryptocurrencies are redefining modern finance. You'll get historical context, key events, and lessons that are still relevant today and can impact your financial decisions. So let's dive in, starting with the first topic, US dollar history. The US dollar, or USD, is today the world's primary reserve currency, but its journey to dominance was far from simple. In the 18th century, each American state had its own currency, making trade complicated. 1775 to 1781. During the Revolutionary War, the Continental Congress issued the first paper money called 1792. The Coinage Act was passed, establishing the U.S. Mint. The U.S. officially adopted the dollar as its base currency, minting coins like the silver dollar and the gold eagle. In 1944, the Bretton Woods Agreement pegged global currencies to the USD, which was linked to gold, solidifying its global dominance. Key lessons. A stable currency requires trust, regulation, and backing. This innovation strengthened the financial system. 20th century, the Federal Reserve System was established in 1913 to regulate monetary policy and strengthen the USD's credibility. USD's global dominance was a gradual process, built on strategic policy and trade influence. The gold standard was a system where a currency's value was directly linked to gold. 19th century, the U.S. officially adopted the gold standard, guaranteeing that each U.S. dollar represented a specific amount of gold. Advantages. Controls inflation, provides long-term stability. Disadvantages. Limits economic growth because currency supply is fixed. Governments have less flexibility during crises. 1933. During the Great Depression, President Franklin D. Roosevelt temporarily suspended the gold standard, requiring citizens to surrender gold to stabilize the economy. 1971. President Nixon completely ended the gold standard in the Nixon shock, turning the USD into a fiat currency backed by government trust rather than physical gold. Impact on the U.S. economy. Fiat currency allowed flexible monetary policy, inflation control, and economic stimulus became possible. Gold standard taught the importance of fiscal discipline. Modern lessons. Even today, gold is used for wealth preservation and hedging. Investors balance gold and USD in their portfolios to manage risk. Now, let's move to the modern era, cryptocurrency. After the 2008 financial crisis, many people questioned traditional banking and fiat systems. 2009, Bitcoin was introduced by the anonymous Satoshi Nakamoto. It was the first decentralized currency, enabling peer-to-peer transactions with a limited supply. Why crypto matters. Independent of central banks, transparent and secure via blockchain technology. Scarcity. Bitcoin capped at 21 million coins. Store of value. Other cryptos and DeFi. Ethereum, stablecoins, and decentralized finance, DeFi projects, are further disrupting the financial system. Comparison with history. Just like the USD replaced the gold standard era, crypto is now challenging the trust and flexibility of fiat currency. U.S. audience perspective. Opportunities for investment and speculation. Understanding and literacy are critical before entering crypto markets. Lessons. Financial systems. Evolve. Commodity to fiat, to digital trust and adoption are key for success. Diversification and research are essential for investors.